Okay guys, now you may hear me better. Can you hear me now? I have to remove my headphones, and I do believe that was the main issue while I was with the headphones on. Okay, yeah, I know there's a problem probably with with the headphones. Sorry guys. Okay, sorry, I was trying to avoid surrounding space sounds. Okay, anyway, I will start over. Okay, let's start over the day. Let's say that the one that is much better is Dave. Thanks God, he is back home. At least that's the news we get late yesterday in the American afternoon. Of course, he's not feeling 100% up, but well, being at home means he's on the right path, and we are very happy for him. So that's the first news. The second news is that the dollar is in sell-off mode, and the market is running faster than I can speak or fix my micro, and I apologize for that. But I was saying that the fact that the euro broke above the 23.6% retracement of this daily bearish run, which is not the full fall, but the one started around 137, yeah, and ending at 125, has now gave up, right? So the main target right now could be this area around 29.50, 130. We have a hell of a congestion area in there. So that's the level we will be looking right now. What's NG, Ali? Sorry, I'm not sure if I understand what. Natural gas. Okay, natural gas. Yeah, sorry, my mistake for a second. Sorry, I had to be honest. I'm not a big follower of natural gas and oil and stocks and gold. The fact is that I keep an eye on them, mostly in the highest, of course, indexes and what's going on in oil and gold because of your FX in the forex market, right? But I'm not a big fan or an expert on those, so my apologies for that. Anyway, I was saying that since the bearish run in the euro began, in fact dollar gains, dollar momentum began a couple of months ago, sorry. COD report has been reportedly saying that both the euro and the yen were the ones among which we had the higher amount of shorts against the greenback, right? The euro dollar shorts and dollar Japanese yen longs. So those levels were, those pairs, sorry, are being the ones that are now reacting strongly to this current greenback sell-off. And again, in my humble opinion, I do believe that much of what's going on across the forex world has to do with what we are seeing in the US indexes, right? We have both Standard & Poor's and Dow Jones at several month lows, accelerating, ready to post another nosedive daily basis. Those that rallies that trigger panic among buyers, right? And it's what we were discussing earlier on the week. We had a couple of years bullish rally with practically no corrective movements, no retracement, and well, it seems the part is over, and at least we are going to see a huge correction in here. We are not that far away of this area, 1802, and my take is that we lost this one. We are going to see much more of current market direction, particularly Shen gains. Okay. Anyway, the other news, I'm not sure if you heard, I will try to do a small interview today. I have invited Adam Button to join us from Forex Live, because I have heard, I'm always overhearing Dale's and interviews, and I do really enjoy it, and I really hope you enjoy too. So if you have any questions or comments or want to share any trading idea, you're welcome, guys. The room is yours, not mine. The room belongs to you users, not to me, that I'm barely trying to fit in one of Dale's shoes, okay? Anyway, and another thing that I was also watching is that the commodity currencies behavior has been pretty erratic lately. I'm not feeling much comfortable with what's going on in Aussie or in New Zealand dollar. I'm not seeing the picture clear in here, right? Despite we are seeing some downward momentum in the greenback, the pair is struggling to regain the 88.20 level. I would like to see even further advances, maybe even above the Fibonacci, because we have sort of a double floor in here, the neckline a few pips below the Fibo. So actually to call for a bottom in this one and a stronger upward movement, I would like to see an advance above 89 or so in here, 89.20. I will be much more comfortable, okay, to start looking at a bullish Aussie, at least me. If you have any idea, it's welcome to be heard. In the euro, we are having now a small pullback. Let's see if this previous lows Fibonacci area holds 27.80, 27.90. If buyers don't came down there, then this will be just I can't find a word, and I really miss this in this moment. It's smoke, okay? The movement will be just smoke, not a confirmation. But if we hold above this level, then further dollar weakness should be expected, okay? Let me check if we have more scheduled for today, but the fact is that all data in the US miss expectations. We have weaker retail sales, manufacturing in New York grow well less than expected. Market was expecting something around 20 from the previous 27, and we have 6. So actually data today says that American recovery is not what we were expecting or pricing in lately in the market. Keep in mind that everything that came out in all the biggest economies, in all of the major economies, it's pointing just market is reading it as if when rates are going to be hiked, or who will be the first to move rates. A couple of weeks ago, one of the guys that works at FXroom as a manager session in the Asian session says that he has been saying that most of the lack of volatility in the market had to do with central banks keeping their rates steady at record lows for so long, right? And despite I'm not 100% agree with him on that theory, the fact is that it has a good bunch of reason. I mean, it's a huge part. I mean, it's a good part of the lack of volume in the market. There are no rate differential amongst currencies. There was not much to speculate with when you were in the forex market, and there was much more interest and charm in stocks or other commodities, right? So maybe this time, and what we are seeing lately in the market, the fact that market starts speculating, well, the UK will rise rate, or the US, or who will be first, or beginnings of 2015, now later in 2015, and all that market talking has come along with the recovery in the market volatility, right? So the market is excited, overexcited about that. It's like waking up after an hibernation period that's extended for a couple of years, extended for long, okay? Anyway, dollar is pulling back. Let's see if the level holds. In pound, the critical level or the first support in here is of course the 160 figure, but I will place my attention in this 59.50 area, former lows, right? So I believe that if we broke those levels, or we close the day below it, then again this will be just smoke and dollar will resume its advance. But if we don't, then current corrective movements may extend, okay, over the upcoming days. Okay. Adam is making some trades and says that the Standard & Poor's loses all of its gains of 2014. That's a big deal. That's really a big deal. Okay. That's, as I was saying at the beginning, we are at the verge of entering the panic stage in the stocks market, and that will be a hard rocking chair for the currencies also. Okay, the comments. Okay, no signs that you are alive on the other side. Okay. Anyway, I guess I will prepare everything and see if Adam is around and if I can call him. I really wish my headphones were working so we don't have an excess of noise in here. All reports today, yeah, all reports are coming out later today. I do believe in a while. Let me check calendar. Yeah. Are you sure they're coming out today or tomorrow? I'm watching the calendar. It says Thursday for gas and oil. They're coming out tomorrow, Ali, not today. Find support at 50% favor. Okay, let's take a look at that favor. Yeah, I see what you're saying. Probably this, right? Sort of. Let me see. Okay, 55.50 was your favor, right? So probably you're taking another, okay, low, probably around here. Yeah. Yeah, there. Okay. Thanks, Ricardo. Thanks for the collaboration. Yeah. Yet if we've lost it again, I do hope that's the level you are talking about. Yeah, I think so. Latest bullish run. So you're expecting some bounce from these levels, okay? Up to where? Up to the 38, 106.64. That's the level, okay? Pound is retracing back below 160, yeah, but it's struggling around the level. I usually try to give currencies more than a couple of pips above or below a level, particularly when we have this sort of violent movement. So maybe we can test the 159.90, but see what's going on. The market is pushing it back quickly to above 160. So it's not like we are having a lot of definitions right now, but seems for me at least right now that the 60 level is holding, or at least there's a battle going on in there, right, between buyers and sellers. Okay, let's see if I can put on my headphones. Okay, so we don't have an excess of noise when I try to call Adam. Okay, can you hear me still? Are you seeing everything's okay? Everything's working? Seems so, right? Everything's fine. Okay, I bought early at 59 and book profit. Good for you. And Ricardo, I do agree. 104.60 is a huge. It's we have former highs in there, and I do believe that this level, 105.20 and 104.68.20, in those levels, in between those levels, we have a lot of intraday highs or daily highs and lows. So I would be I'm expecting this rally to fall as low as this area, right? 104.17, 20, 50. That area is the one that should hold in the dollar Japanese yen. If we lost that one, then the rally will turn pretty negative, right? But I'm also looking at those levels. Yeah, agree with you. If we take them out, then 100 to 103 again or lower are likely. Yeah, indeed, I agree with you. Okay, sorry for that. I'm not there. I will stop recording for a few, and I will ask Adam if I can call him. I'm not sure how Dale does this. Okay, hopefully we will have Adam joining us in a few. I guess it's not the best moment. I'm waiting for his response in the meantime. I was thinking about what we had today in the United Kingdom about employment figures. The fact is that despite the numbers were mostly positive, the market did not react as expected, right, to the report. The numbers were good, yet not outstandingly good. So not sure why the United Kingdom has not been favored earlier on the day with those readings. At least the economy is growing, the employment sector is growing. It's true the numbers were not a shock, but yeah, here we are, right? Anyway, dollar did it later on the lane. Okay. Euro so far is also holding there. Okay, someone's asking some commentary I read earlier at FXroom.com was that the GDP data is not solid enough to raise expectancy for a rate hike soon. Yeah, I do agree with that. I have to agree with that. The fact is that wage in the United Kingdom have been pretty depressed over the past, I don't know, 5 or 6 months. So despite the mild spike in wage, we had today in the report, in the employment report, is not actually a sign that they are back to normal, right? And the other thing that is a bit more worrisome is the fact that yearly basis inflation is down to 1.2%, right? So after previous reading, I'm not sure if it's exactly, but I do believe that previous reading was 1.5%, right? You know that almost all central banks had an inflation target at 2%, right? That's the equilibrium for the inflation ratings in every big economy. If they are way too low below that, they usually tend to do easing, right, to boost consumption, because the lack of inflation is a sign that the consumption is falling, right? That's what exactly is going on in Europe. We have 0.3% inflation, which is really, really depressing, and of course a sign of inflation. In the United Kingdom we are not that low, but the United Kingdom has been an economy that usually struggles to keep it on 2, and it's always at 2.2, 2.3, 2.5. It's always exceeding the target, right? And the fact that over the past few months the inflation has been going down and down, right? it's pretty discouraging. As lower the inflation goes, the country is closer to doing facilities than to retrieving facilities. Okay, you know what I mean? So that's the main reason why the UK, it's or chances for the UK to rise rates are have diminished with the latest news. Okay, Adam is here, so I will try to call you. Call him, sorry, and see what we can do and share screen, right? Wish me luck, guys. Hi, Adam. Nice to meet you. Yeah.
Glad to talk live about markets with you guys.
Thank you for joining us. I hope you can hear me fine. I hope the room can hear you fine. Let me see if I can share you full screen. I have not much of experience on this, so be patient with me. Okay.
No problem.
Let me see. Okay, I do believe that now you're full screen in the LAR. So you're welcome also to share your charts. What do you think that it's going on across the market? Meaning, okay, bad data trigger some lot of weakness, of course, but the fact that stocks are also under huge pressure, I do believe it's the main factor of what we are seeing in the market these days, rather than this round of negative data. What's your take on this?
Yeah, absolutely. The data couldn't have picked a worse time to hit. I mean, it's a retail sales report. It's soft, but it's nothing out of the ordinary. I mean, it's just 1 week data point. Empire Fed was soft, but the U.S. economy isn't in any kind of trouble right now. But it hit at a terrible, terrible time. Sentiment is damaged. The market's worried about the end of QE. Europe especially is looking like it's slowing rapidly. And you know, it happened at the worst possible time, damaged sentiment, and that's just the way it is with market sentiment sometimes. When bad data hits at a bad time, everyone already had their finger hovering over the panic button and just started to smash it, and it started to cascade. I mean, the bond market going nuts, Greece stock market everywhere, really. Just looking through the ticker, massive dollar sell-off in places where it really shouldn't have been selling, like the commodity currencies as well. And it's just a full-fledged panic. I mean, it is what it is. It happens from time to time.
Totally agree. So, what do you think it will come up afterwards? Sorry. Do you think this is sustainable in time or not?
Yeah. I mean, no. I mean, no market ever falls at this rate. It bounces, and already we've had this massive, violent bounce. I mean, looking at dollar, my charts were 100 pips off the lows here, up to 106.34, and it ends when it ends, and it's not necessarily over today.
No.
And I think you don't necessarily need a catalyst. I just think cooler heads will prevail. It's good news if the Fed isn't going to, to hike as quick as we thought they might, and that's going to be good for stocks. But it hits the newspapers, and it takes a few days, and the selling keeps running through. So I don't think you need to step in and be a hero and call the bottom here. If you're trading, you need to trade small. You need to trade smart.
Yeah.
I mean, emotions get high, fear and greed, but it is not the time to try to be a hero.
Where are you now? I overheard, because I'm always listening to Dale's interview in the background, and I heard you moved to Panama, back and forth between Panama and Canada.
Yeah, that's right. I understand you're in Argentina. I lived down there for a little while. I was in Panama this time last year, which is just a booming place. And now I'm in Montreal. I'm in the trading floor here at FXroom Capital. They had a little bit of space, and it was a trading operation. You can imagine I had to get them to quiet down here before this, because it's been a lot of yelling and screaming this morning. Let me tell you, a lot of swearing.
Yeah, I can imagine.
And a lot of just disbelief in these market moves. I mean, watching the 2% and 10s, and then it just broke down and just getting obliterated. It's mostly bond futures here, but it's the same sort of news, same sort of moves. I mean, all the correlations go to 1 on a day like today.
Besides what we are witnessing today, something that I don't tend to follow much or trade or care much about, but I know it's really important, is US yields. Do you follow yields first of all? Yeah,
I think we look at you have to look at everything. The bond market was really way ahead of this crushing move in all assets. I mean, yields kept falling, stocks kept going higher, and then eventually stocks followed yields down. The dollar was peaking even as yields were coming off, and the bond market was ahead of the game. But now it's full on panic everywhere. But I mean, it's been quite a turnaround here from the bottom. So it's an impressive bounce. I think, and right now you're just looking at technicals. I mean, there's no headlines crossing. You just try to find a level. Dollar yen. I mean, I can pull up a screen.
I've
got it up here. I'm sure everyone's got their own screens up here now. Anyway, but that's just the dollar yen daily chart. And I don't necessarily have it up there, but we got right down about the 100-day moving average. I mean, even the levels get a little bit blurred here. I'll just throw it in there. It's an Dania chart. That's not the one I'm looking for. It was the 55-day. But I think you just got to look for a level. It was the 55-day. I'm just looking at another screen there. Where did that go? And we got right around there, and it started to find some support. And that's the 200 in there. There's the 55-day. We got through there about the 50% retracement of the July to September move, and it started to find a little bit of life there, and then just the big figure at 105. I mean, those are sort of things that have a lot of impact on a day like today, and this is a very impressive bounce so far. But are we going to bounce all the way back? No, I don't think we are. You don't go and you don't see charts where you get these gigantic V-shaped bottoms. You can get it in a day or 2 days, but you have 5 days of selling in the dollar or stock market, and it doesn't snap all the way back. It has to bottom out, level out, maybe even fall some more. So where do we look? You look to headlines to turn it around, and you look to technicals, and you just try to catch some of these moves and hang on.
I do believe that I lost your video, or you turning out. I'm not sure if it's me or if it was you.
Yeah, no, it does seem to be me there. Sorry, I was trying to share the screen.
Yeah, no problem.
Let's see what's happening here.
I do worse.
Right, we have the video back.
There you are. I was thinking that a few minutes ago, one of our members also make me notice that Fibonacci area in the dollar Japanese channel around 105.50, and indeed, price is bouncing there a bit at least. But still, I do believe that the risk today remains against the greenback, right? I'm not saying much.
I think it's in dollar yen. Maybe in the commodity currencies, though, I think the dollar can bounce a lot. If we're headed to a period of slower global growth, it's a terrible time to be long the Canadian dollar, for instance. I mean, we hit a 5-year low yesterday. That's not the sort of thing that just turns around. So I think short the Canadian dollar is a great place to be. Any of the commodity currencies, really, although Australian dollar, Kiwi are a bit more beaten down, but I mean, the Kiwi's a carry trade, and it's not washed out yet. I remember days like this in the crisis. I remember seeing Kiwi yen fall 14% in a day. So if you start to get to a real market panic, these moves, as exciting as they are and as crazy as they are still. We might see even bigger moves than this. But fundamentally, I mean, I want to bring it back to that eventually, because that's where we eventually need to get. There is no need for panic. Europe's slower. The U.S. is okay. Inflation might be low, but this isn't a 2008 sort of event. There is absolutely nothing out there that looks like bank failures or credit crisis or any sort of crisis.
And the imbalance between the Fed and the ECB remains where it was a month ago. So I do have to agree with you in this. Anyway, I'm going to ask you a last question. I know it has little to do with the market, but how high do you think concerns over Ebola and what's going on around the world can affect the market? I know it's not affecting the market these days, but I'm shocked because of the first world cases we had in Spain and the US, resulting in that the infected people turned out infected their nurses that were caring of them, and I don't know, I do believe we are close to getting to a pandemic. I know it sounds a bit maybe too much to say, right? But how much that this can affect the markets and how much this can affect the economies if we start to consider the fact that if this continues at this pace, I do believe that we are going to start to see closed airports and reduce international commercial. And the worst that I heard yesterday is that chocolate production is at risk, meaning chocolate is being produced in Africa, in the countries that really, a joke apart, is huge. It's huge, but it's what I heard yesterday. I'm really concerned about this. Not about chocolate, was a joke.
I remember the chocolate and Bariloche in Argentina, then a very famous spot.
Yeah.
I think, listen, I've been watching, one of the charts I've been watching and talking about is if you search in Google trends for Ebola, and you'll see, it's just a very parabolic trend, and that gives you a sense of the fear. People search for Ebola when they're worried about Ebola in Google, and that's one of the charts I'm looking for, is a peak. And I don't think we're headed to a pandemic. I think Liberia is headed for a pandemic, and it's extremely unfortunate that West Africa the suffering is going to be unparalleled. But I don't see it spreading in modern health systems. It's entirely containable, but
it's
it's totally containable, I believe. But and I think that fading fear is one of the great trades that retail traders can get involved in, and you have to wait. There will be a peak of fear in Ebola, and I think it is in the market right now. But if you look at airline stocks, I mean, that's something that's getting absolutely massacred on this. Meanwhile, fuel prices are down 25-30%. Airline stocks should be ripping. So when it turns around, I mean, those are going to turn around in a huge way. I don't believe it will be a global pandemic, but I think right now is not the time to call, the top or whatever, the bottom in Ebola. And it's something you have to watch. But that's my feeling.
Okay. I won't steal you any more time. Thank you really for sharing these moments with us. And we hope Dale will be back soon. So thank you, and maybe next week we make you another call, okay?
Yeah, thanks. What a crazy day. I mean, keep your head, everyone, and stay in the game, because this is going to be great trading for the rest of the year, I think.
Yeah. Okay. Thank you.
Thanks a lot.
Bye-bye.
Bye.
Okay, I do believe I'm still here. I was reading someone saying bull market stops in violence, bear markets bottom in silence. Those are Dale's words, of course, and he's right? Who can discuss in here that Dale is not right? Anyway, guys, Dale is not here, Windsor. I'm sorry to tell you, Dale is still recovering from his surgery. I'm doing the little I can to cover him and help him some, to keep Villar alive when he gets strong back. And that's it. Okay, anyway, thank you guys for being here. I really have to leave you now. I hope you enjoyed today's LAR, and see you back tomorrow. Okay, thank you, and bye bye.